Yeah, we heard Michelle Bullock basically say the RBA considered lifting rates at that meeting. Obviously, they kept interest rates on hold, but they did put out the Statement of Monetary Policy, which has inflation, trimmed mean inflation, getting to 3.8%. And the federal budget's forecasts are a fair bit lower due to those handouts. Where does the RBA go from here? Do you still think there's a chance they could lift rates over the next few months?
Look, I think there is still a chance that that's the way it could play out. The economy is finally balanced. One thing we did learn from the budget is how big the bracket creep is. The Treasury gave us estimates, and that shows that bracket creep alone has taken $41 billion out of household budgets in the last 2 years. So that's a pressure that's there. So even though the RBA hasn't raised rates this year and only raised them once this financial year, we can still see the soft retail spending because of that bracket creep. And look, they're not going to raise rates while the consumers this week, even if employment remains strong and even if inflation is just bouncing around at the top of that sort of 3-4% level. So look, I still think there's the main view is that their next move in rates will be up, that there still is a couple more rate hikes required before we can guarantee inflation is back to 2 to 3%. But whether it's in the next few months or later this year is very hard to tell at the moment.
Yeah, you mentioned bracket creep. Obviously, those tax cuts which come in from the 1st of July, they're going to help address bracket creep over the next few years. But you'd imagine this is a problem that's probably going to come back pretty quickly, isn't it?
Yeah, well, two things on that. One is that the tax cuts can't come quick enough because it's clear to me that bracket creep is playing a huge role in crushing consumer living standards in this country, on top of inflation, on top of rate increases. So this tax cut will really relieve that pressure. But look, we're going to get it coming back again the year after because the revamped Stage 3 tax cuts kept that tax bracket in there, which originally they were going to remove. And so any inflation, any wage increase will create bracket creep in the years ahead. And of course, this is, I think, a real issue for Australia in our tax system because half the world's advanced economies index their tax brackets. We don't. And as I said, I think the bracket creep's been a major driver in hurting consumers in the last 2 years.
Opposition leader Peter Dutton, his budget reply speech was Thursday last week. Centrepiece is trying to fix the housing market. One way for him is by cutting migration. Do you think that's a successful policy that could work?
Look, I mean, both the government and now the opposition want to reduce immigration from these very, very high rates. It remains to be seen. I'm sure we will get lower numbers over the years ahead. Long term, it's not the solution, but short term, we definitely need some lower immigration numbers to take that acute pressure off an existing housing shortage. The solution long term, of course, is to reduce the cost of building new dwellings and, of course, to increase the amount of new dwellings we build. That hasn't been addressed by either of the two major parties in their federal budget sort of positions and is really the domain of state governments. And of course, making sure we keep the costs of construction down. And that's related to everything from labour as well as red tape and zoning and all that sort of thing.
Last Thursday's job numbers, they were a bit of a surprise. Unemployment up to 4.1%. Where do you see unemployment heading over the next few months? Could it get to 4.5% pretty quickly?
Look, it could. There's no doubt about that. And that's our expectation for the end of this year, but it could easily happen in the next few months. The reality is we're getting significant population growth and we're creating a huge amount of jobs just to keep up with that. The number last week had a bit of noise in it. There were a lot of people waiting to start a job. The unemployment rate probably didn't go to 4.1. It was probably still at 3.9 or something like that. But to your point, it is heading up. And that's because we're not creating the amount of jobs to match the workforce growth. But of course, in terms of the economy's performance, what matters is people getting jobs and the income that comes with that. So the fact that we got 38,000 jobs in April, which was largely overlooked by the market, highlights that over the first 4 months of this year, we've created over 100,000 new jobs, which is going to eventually add to demand in the economy, especially with these tax cuts coming and also the cost of living relief.
And when you look around the world, we could see the Bank of England cutting interest rates next month. We could see the US Federal Reserve now cutting rates by September. It's got the stock market really hyped. We're close to record highs here in Australia and other parts of the world. Where do you see the global interest rate position heading over the next couple of months?
Look, I think we got a cut from Sweden a few weeks ago, which was instructive. Their inflation was still stubborn at 4%, but they decided to go. Why? Because employment was falling. And I think that's what we're going to see in the second half of the year is not so much that inflation's back to target and that green lights central banks to cut, but they'll cut because it's of economic weakness and, importantly, employment weakness. And the same here in Australia. The RBA won't be hiking. In fact, they would look at cutting if employment was falling. So for the stock market, that's a problem because really the motivation to cut rates is going to be a weaker economy. And I think that tension is going to play out with more volatility in the stock market over the second half of the year.
Warren Hogan, Chief Economic Advisor at Judo Bank. Thanks for your time today.
Thanks, Ed.